Good afternoon, ladies and gentlemen, and welcome to the ENTEQ Upstream Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply just click on the box below and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard. Before we begin, we'd like to submit the following poll. I'll be very grateful if you could click yes, no, or do it later. And before we begin, I would also like to remind you that this presentation is being recorded. I'd now like to hand over to Andrew Law, Chief Commercial Officer, David Still, CFO, and Martin Perry, CEO of ENTEQ Upstream. Good afternoon to you.
Good afternoon. I think we're going. This is our first time on this platform, so please bear with us. It's always a challenge when you're presenting to a muted audience, so I apologize if we become a bit stilted, but we'll do our best to deal with questions as if it was real at the end of the session. What we'd like to do is introduce ourselves, not knowing who's joined us and whether you know about us from the past or whether you're newcomers to ENTEQ. I'll give you a little bit more history and background than I normally do, and then run through, where we are now. This is our interim results, so generally it's kind of an update rather than a full position. So just to position where ENTEQ fits, historically we have been an oil and gas service technology business. And to explain what that means is in the big picture of the oil and gas industry, you have your oil company who owns the acreage where the wells are drilled and where the production comes from. And then you have a series of service companies who actually do all the work. So they do everything from drilling, managing the production, and then all the way down, to what we call, further downstream where it goes into the refineries and so on and so forth. The fact that we're upstream says it's exactly what it says. We're as far upstream as you can get, which is basically right down the bottom of the well where things are going on when you're drilling it. So what our historic business model has been is that we design, engineer, manufacture equipment, special technology equipment that is then sold to people or rented to people who operate it on the rig. And our customer is contracted to the oil company. So we're one stage removed from the oil company in that we're typically providing the service company. So the names you may have heard of, Schlumberger, Halliburton, Baker, which is Baker Hughes, which is now part of GE, or there's a combination there. They're the big sort of multinational service companies. And they dominate about, depending on the specific sector, about 50% of the services provided worldwide. We currently do not sell or rent to those majors. But what we do is we provide the similar equipment that Schlumberger does to independents who may not have their own resources for their own engineering and development of technology, and therefore they need to buy it from a third party. So we are the third-party independent, designer and manufacturer of equipment, supplying to smaller, independent regional service companies who then work for the oil company, generally in competition with people like Schlumberger and Halliburton. So that's kind of the market dynamic, and the business model explained slightly. Being more specific about what we do, our traditional market has been in something we call measurement while drilling, which is exactly what it says on the tin. When you're drilling an oil well, you need to know what's going on all the time, real time, when you're drilling. Where are you in particular? So, you're drilling blind, you're 3 miles down, you're way under the ground and you're going through the reservoir. You need to know where you are. You need to know what's happening just behind the drill bit. So measurement while drilling tells you where you are in space, and it measures various other parameters about the drilling process. Beyond that, and we'll come to this as part of our future geosteering strategy, which we're going to talk about, Now, there are also measurements that you can take about the rocks that you're drilling through, and that helps with the whole steering process. So again, that hopefully positions the business model where we are in the supply chain and where our equipment fits in the process. I've said oil and gas all the way through this. We also supply the geothermal industry. That's becoming a bigger part of our business. So any well that's drilled for whatever purpose needs a measurement while drilling, and these type of technologies that we supply. Historically, and I'll just give 2 minutes on the background, ENTEQ was formed as an investment vehicle. We raised money on AIM, and we had a very willing investor base, because I had previously run a what became a very successful PLC on the main market called Sondex, which we grew from virtually nothing to something we sold to GE for just shy of 600 million. So dollars, that is. So we had a happy investor base who were prepared to back us in this venture at ENTEQ. And so the companies that we've now brought together into ENTEQ were initially acquisitions. We chose the best technology that we could find in this measurement while drilling area. We combined them together, we created a solution, and we've evolved it from there. And where we are right now is a very interesting phase, because we're taking the technology beyond the acquisitions that we've had into a new market area that we're addressing from some developments. So I'm giving you all this background. The key thing is, when these markets, these companies we bought, our addressable market was in the order of 200 or 300 million, 100 or 200 million, depending which market you look at. Importantly, in North America in particular, where the companies we brought into ENTEQ had a domination, and we owned about 25% of the market. So outside of Schlumberger, Halliburton, and Baker, about 50% of the independent drilling companies were using some equipment supplied by ENTEQ. So when there were 1,000 rigs drilling, we were probably on 250 or 300 rigs. In one form or another, our equipment was being used. So we're very well established. We have a very good reputation for reliable, robust equipment. And as we'll talk about later, in particular, it's important that it works at high temperatures and high pressures. So the more difficult wells that need to be drilled, we do well in. So that's our traditional MWD market. What we're now talking about as our future, it's just the right time to talk about it in terms of the development, is we're bringing to market a new concept, but in an established market, which is already supplied by Schlumberger and the others, but we're coming as the new kid on the block with something new and different in this what we call rotary steerable market, and we're going to spend some more time talking about that. The important thing is the market size of about $2 billion completely eclipses where we have been playing to date. So hence we think we have a very exciting uptick in what we can do in these markets going forward. So I apologize for taking some time on that slide. I just wanted to position where we were, giving a little bit more history to those of you who don't know us, and I apologize to those who may be listening who knew some of that before. Hopefully you've seen our interim announcements, and we'll spend more time on the detail of the numbers later. Clearly 2020 for everybody has been a year of change. In the oilfield service sector, it's been even more of a year of change than it has been for the world that's just been affected by COVID. Because back in March, April, you may or may not remember, just at the same time as COVID came along, we were embraced by an oil price war, if you like, where the Russians and the Saudis decided that this was the time to really break the back of the North American drilling market, and the oil price came right down, and really everything hit at the same time. So it was a horrible time in North America in particular, for all of this year, to be honest. Fortunately, and we'll spend more time talking about this, we had some development going on in the international markets. Andrew, who's going to speak, has been developing that for us. So we're in survival mode. We like to think we have a fairly mature management around this business. So we reacted very, very quickly in March in terms of cutting overhead, bringing ourselves back into the markets where we thought we could do well, and focusing on the technologies that still had a future. However, what that meant, was looking at the 6 months just gone versus 6 months a year ago. We are quite well down in terms of revenue, but what we've just about succeeded to do is to remain profitable. We'll talk about how we spend our cash, which is really a choice. It's investment, not use of cash. So we'll come back to that, and hopefully you've seen some of the numbers already. So the other thing that we're doing right now, which is the announcement and time for change. I was a founder of this business and have been with it from the beginning. I have done quite a lot of M&A and quite a lot of growth in the sector in the past, and I intend to continue doing exactly that. However, I think the size that our business is now, after this sort of change in the market, means that the business doesn't need me to run it day to day. Andrew, we recruited or joined us. Did we recruit him or did he? I don't know. We came together beginning of 2019. Andrew has a great background, from Schlumberger in the wireline world, which is kind of where I come from as well, through management, through finance background, and so on and so forth. Has grown our business for us in the international markets in the last couple of years. So he's more than qualified to take over as CEO going forward. That change is going to happen in April. I'll step back to a non-exec chairman, but be very focused on being a pain in the arse to Andrew, and because I do know quite a lot about what he's doing, but B, looking at some of the potential inorganic ways for this business to continue to grow. Final word on the board. We also brought in another very experienced, again, ex-Schlumberger, so oil field background guy, with private equity experience, good investment management experience, Neil Hartley. So I'll just touch on the board structure from April onwards, but we're really well formed for a very small company. Our board of directors, I think, is probably exceedingly strong for the size of company we are now. But that indicates our intention and belief that we can grow this thing into something, a number of multiples bigger than we are today. I'll finish off by just, confirming, kind of what I said just now about the market, and then I'll hand over to Andrew to talk more about, the specifics about what are going on. I talked about the oil price war back in March, April, where oil price, dropped, as you can see from the graph there, down to $15. Our driver as a drilling company related to drilling technology is completely driven by the rig count, the number of people drilling at any one time. So, a couple of years ago, we were up as high as 2,000. We came down to 1,000. In North America, we're now creeping back up from 250, maybe up to 300 rigs drilling in North America. Internationally, there's also been declines, but it's about where the focus is. So having said, having accepted that decline, what that means to us is that because we sell equipment and it's capital equipment, after a decline, our customers do tend to have extra capacity. So they've got equipment in the in the warehouse out the back that if they were to pick up a new rig, unfortunately they can go out and sort of use what's there. Having said that, it's it's very high technology, needs a lot of maintenance and so on and so forth. So after a period of time, the equipment that's there does need upgrading, and so we can move back in. So what I want to say is, even at 300 rigs, we have even for our traditional product line, we still have a future and a recovery in North America. We'll talk about what we're doing internationally, but the theme of today's presentation is about the new technology which we can move into these markets as well. So enough about the market. I'll let Andrew take over and talk. Well, actually, this is a more general one still, but I'll let Andrew pick up the points here and then move on to specifically some of the international things that we're doing.
Okay, thank you, Martin. Martin's covered the North American point. The one area where we're seeing still a lot of activity is in China, in that there's a directive by the Chinese government to drill for gas. So we're seeing a lot of drilling activity there. The good thing for ENTEQ is that this is hot and deep, and that's where technologies such as ours are needed. Regardless of what happens with the US or not, there's still a capacity for drilling wells globally. And if it can't be done economically in the US, then we see it as Middle East and Russia being the main markets where that activity will happen. What we're seeing globally is there's a subtle shift from the companies that Martin mentioned earlier about Schlumberger and Halliburton. As there's a subtle shift away and towards independent service companies, regional and local independent service companies. And what that means is they tend not to be as vertically integrated, so they tend to need to buy and rent equipment from companies like ENTEQ. They don't tend to develop it as much themselves. Across the industry, there's a continued push for increasing efficiency in drilling operations because of the price pressure, and because that's how the industry keeps evolving. And ultimately, we've had an underinvestment in the sector for the last 5 to 6 years. So in the medium term, there will be a requirement to drill more wells. So what that means for ENTEQ is, I mentioned China. We've had 70% of our revenue in H1 from China. We've shipped to 2 new customers this year. So we've shipped equipment to China. We've got, and we're discussing potential follow-on orders with both of those customers. We have a refreshed approach in Saudi. So we've got a very good partner in Saudi who is undergoing the accreditation and registration with Saudi Aramco. And that is anticipated that would then continue, and they would grow as a local service company in Saudi Arabia, possibly beyond, but the main focus is on Saudi. There's continued demand for our technology and our equipment in Russia. So we have a representative there, and we are positioning ourselves to continue and grow and make a stronger presence there. In the North America, we've had historically had quite a good rental model where we would rent our equipment to service companies. Because of the obvious market decline in America, that will be limited. There will be some opportunities for rentals, but it's certainly not, we don't see it going back up because of the excess capacity to the same as where it was before. So Martin mentioned a sort of refreshed technology approach, and within the drilling industry, where it used to work and where it still does in many places is you would pick a well trajectory and you would drill according to that well path. What geosteering is taking sensors from the rock, or taking information from the rock using sensors as you are drilling, and then using that information, transmitting it up to surface to the rig, recalculating your well path, and then instructing a steering system like a rotary steerable to then alter the path of the well. And the idea of that is that you set your path of the well within the reservoir zone, ideally, and you're getting a much more precise well path, and therefore you can have benefits like increasing production and greater drilling efficiency. So what you need to be able to do that is you need the sensors, you need them as close to the bit as possible. You need to be able to transmit larger volumes of data than normal up to surface, and then you need a rotary steerable to be able to change the path of that well. And that's done real time. So that's a continuous sort of feedback loop where you're changing the path of the well according to the information coming in. And Martin mentioned that, you know, we historically played in a 100 million market. The rotary steerable, which is a subsector of this geosteering market, is approximately 2 billion. The geosteering market is 12 billion on this report, this chart we have below. That is an independent chart that we got commissioned during COVID, so it takes into the COVID into account. So this is not a new thing, but it's growing, and as you can get sensors close to the bit, it makes it more useful, and you're more able to control the path of your well. We see that there's a strong appetite for those local and regional service companies to play in this space, and generally there's a growing demand for digitization across the oil field. So what that means to ENTEQ is it's a continuation of what we have developed as our normal platform, of our base platform. All of the technology projects that we have ongoing right now are perfectly suited and ideally positioned for this market. It also gives us the opportunity to expand our customer base, and also equally exciting is to have inorganic opportunities as well. Okay, I'll hand over to Martin for the RSS.
Yeah, I'll give you a little bit of background on this particular project, which is, I think, the driver for our next phase and part of our approach to this geosteering market that Andrew's talked about. Let me just explain this again, taking a step back. Rotary steerable. So when you drill a well, you have a drill bit at the end, which obviously has to rotate, you know, in order to penetrate through the rocks. The challenge is when you're going round a corner. Now, how the hell do you get this long string of pipe to continue rotating when you push it round the corner? If you're pushing from the surface, you can't get it round that corner. So traditionally, and still, the majority of the market actually stops rotating the drill string. They still drive the bit through a motor, but you steer it through sort of sliding round a corner. So what a rotary steerable is, it's a clever mechanism that allows you to keep rotating the whole string while you drill round the corner. And that has lots of operational efficiencies, make it quicker and cleaner to drill. So some of the big guys, Schlumberger and Halliburton, and Baker in particular, have had products that do this. In our opinion, the products that are out there are somewhat mechanically complex. They literally have pads that come out as the pipe is rotating and push. They go in and out, in and out, in and out, pushing against the sides of the rocks to push yourself around. And of course, there's a lot of moving parts. There's a lot of wear. There's a lot, it works, but there's a lot of challenges and high cost in maintenance and so on and so forth. So Shell recognized this issue, a number of years ago, and commissioned internal research within Shell over the last 10 years. Nothing happens very quickly in the oil industry. And in their labs in Rijswijk, they got to the point where they had invented, patented, protected, what we think is a completely unique way of doing this steering. They got as far as drilling a test well in Norway, which went well. It proved all the concepts, it proved everything. But Shell is an oil company. Shell doesn't build their own products. The prototype that they built, really wasn't ready for downhole conditions. They didn't have that experience. So they looked for someone who could, take what they'd done, make it industry ready, downhole ready, make it ready to work in all the nasty conditions that you have when you're drilling a well, and commercialize it. So I had a number of connections in Shell over the years, so we managed to get there, and we managed to get an exclusive license to this technology. there's been some questions regarding this, so I might just deal with them as I go through. So one of them asked for the terms of the SRS technology. Now, we haven't shared the exact detail of the contract, but suffice to say that we will pay Shell a royalty, but only after we've paid back our own investment in this business. And there's no end to the agreement, so it's a perpetual agreement, unless one of us defaults or whatever, we have a falling out. So effectively, we own this technology going forward, and we'll pay Shell a royalty once we're fully commercial. So this exclusive license we signed a year ago. We've been working on the engineering, and we now have everything ready, we think, in a slightly different configuration, to work properly in a downhole environment. We are literally just building prototypes now. Still got some final tests to do at the surface, and we're already talking to Shell about some testing there. So I'll deal with a second question, which it said in previous presentations. We said that our current client base expressed significant interest. Do we expect to get interest both internationally and from the USA? The answer is yes to all of that. So our customer is the directional driller, as I positioned earlier. So absolutely, we can knock on the door of the people who have our MWD equipment and say, look, here's a way that you can add to your technology portfolio in providing a service. Our business model will be slightly different. We're not going to sell this technology. We're going to rent it, and as necessary, provide the training and the added value of having someone to actually operate it. But the answer is the market is there ready for us. To the international side, 100%. So our Chinese customer that Andrew referred to, has been operating actually up to 60 Baker Hughes rotary steerable systems in the past. He's not, they're not entirely comfortable dealing with Baker Hughes. They're a big organization who really want to run their own equipment. So working as an independent, with someone like us and that partnership in China, would be perfect. And same would apply in the Middle East and elsewhere. So let me jump beyond those this slide, the questions to the structure, and I'm obviously not going to go into detail of how this all works. But what the main differentiator in terms of technology is we steer this from the bit. So instead of pushing behind, like if you like having a real wheel drive system, what we do is got a front wheel drive creating pressure differentials around the bit, which effectively cause the bit to fly like an airplane wing. And the pressure differentials pull the bit in the direction you want it to go. Behind that, we redesigned the generators to provide the power, and the electronics to take the measurements and control it, and so on and so forth. So all those elements we've worked on and put together. And as Andrew alluded to, this year the market slightly dropped just because of the market to 1.7 billion. That's currently being provided by the majors primarily, but our differentiator is that it's a unique technology, but much more importantly, it's a lower maintenance, it's simpler, it's probably a lower cost, and we'll just play the game to position that correctly, and it will drill a cleaner hole because it's drilling from the front rather than a problem with rotary steerables. You tend to get a little bit of what we call tortuosity, where there's like a spiraling effect. And we think our system will overcome that. So there was another question here that I was going to address. Okay, here we are. I understand from the interim report, 40% of the rotary steerable drilling service market is accessible by our technology. How is this 40% derived? Is the other 60% already dominated by the big players? Well, all the markets dominated by the big players today. Our new disruptive technology, in the size it is initially, will only address 40% because of the size hole that's being drilled. But we're going to start at the smaller size, and then we can build a bigger tool later on. So just our initial offering will attack that 40% of that 2 billion, and of course, whatever market share we get from that, will be what our revenue could be. Just preempting a little bit from David's numbers that he's going to talk through for you, hopefully, is we've invested, for a small company, it's a big project for us, but the numbers are still relatively small. So on our balance sheet today, we have intangible assets of about 0.7 million, most of which is the work we've done so far on this. There's about another $1 million to spend in the ongoing engineering and the initial prototype build. And then this addresses, I think, another question that we may have, I might come back to on working capital. As we build up a fleet, we can achieve the goals, the budgets we've given ourselves through our own cash resources that we have. If the market, is bigger than we expected and we can, penetrate it more quickly, then maybe we need some external finance to help with that. But our current plan is to self-finance this project, and we hope to be seeing some commercial returns, by the end of, this time next year. We hope to be having some real operations. So hopefully that helps you understand, the upside of what we're doing with the rotary steerable, and there are probably some more questions I'll address, when we get there. We've got some other projects as well, so Andrew will jump back in and talk about other areas.
Yep. So this is one. We've got a number of technology projects ongoing in addition to the rotary steerable. I'll touch on this one, which is a telemetry project. So the idea of this is using a different concept to what has normally been used within the industry to transmit data through the drill pipe up to surface. And that's important because within geosteering and even in normal operations, the bottleneck and the data transmission rates that are being achieved at the moment are essentially not what is required. So this is a very interesting project that we're working on with an institute out of Poland, which would be a very new and exciting way of giving some high-speed data rates. So that will come through its pre-field test. So we're doing in the process of building prototypes for at this point. Okay, and hand over to David for the numbers.
Right, thank you, Andrew. Starting at the revenue, obviously, as Martin and Andrew have already said, the first half of this year is clearly a very different set of market conditions compared to where we were this time last year, hence the reduction in revenue. Pleasingly, the margins actually went up to 60% from 55%, primarily because of a better product mix, selling higher margin products within our range. Moving down to overheads, pleasingly, we've taken out 0.6 million of overheads compared to this time last year, and we are continuing to drive down overheads across the board, and the steady state full year run rate will be significantly lower going forward than the 3.5 that we reported in the full year to March 2020. The result of all those numbers is a small but pleasingly positive adjusted EBITDA. Below the line, the depreciation charge has reduced compared to this time last year, and that's primarily a function of us having fewer kits in our rental fleet, which is primarily a North American product. And the other big number there is the severance costs. That is the cost of the overhead reductions that we've made since the 1st of April this year. Moving on to the cash flow. The change in the working capital figure is primarily an unwind of the creditors that we incurred on the run up to the end of the 31st, end of last financial year, 31st of March. The rental addition of 0.6 is actually relates to the 2 kits that we put into Saudi Arabia for accreditation purposes, and that's absorbed some of that amount of cash. The only other major figure is the R&D expenditure, which is the spend primarily on the rotary steerable system. Result of all that is a pretty healthy 8.8 at the end of September this year. Just a quick run through the balance sheet. So starting from the top, as Martin's already said, we have 0.7 of intangible assets, which are the capitalized costs, primarily of the rotary steerable, but also the high-speed telemetry and a number of other smaller projects. For those of you who don't know ENTEQ, we own we have a freehold ownership of a 6-acre site in South Houston, and that's on our books at 2.3 million. The rental fleet, as you see, it has come down significantly from this time last year, but that is a function of the reduction in the amount of cash that we put into the rental fleet, because as and when the rental contract comes to an end, effectively the last dollar the renter pays us, they get title for it. And everything else, the only other one to really highlight is inventory. So it looks like a large reduction in carrying value, which it is. And if you've read our year-end results, you'll know that was primarily an accounting entry. But what we didn't do is dispose of any of the physical inventory. So we've still got a significant level of inventory number-wise, and we like to feel that we keep that level fairly high because we want to be responsive to customers. And if they place an order, we can literally deliver a kit next week or the next couple of weeks, which gives us a competitive edge. And the final figure is, we already mentioned, the 8.8. So that is the financial summary.
Okay, so you want me to do this one, Martin, or do you want to?
Go ahead, Andrew. I'll wrap up at the end.
Okay, yeah, so just in summary, we see the US market, if there is a rebound, there's still overcapacity of equipment in the market. So we don't see the impact on our business being huge. We do see the international markets showing more opportunities. Many of the new technologies, including some we haven't mentioned, would give access to greater market and greater addressable market. And we see that there will be creation of value as we go through those milestones from field test through to commercialization. We have a track record of continued prudent cash management, and that will continue. And then we have the board structure, which is designed to make sure we can improve our technologies and get access more of the geosteering market, and that's our push there. And then also free up the space to be able to keep our eyes wide open for incremental and inorganic growth opportunities. Okay, Martin.
Yeah, no, I think we're done. I think that there's a couple of good questions coming up, which will allow us to elaborate on a few things that perhaps as an update presentation we don't completely cover. I think the only other thing that I thought about when David was speaking, that if there are people who are new to us, just to say, Andrew, David, and I are based in the UK. We have a small serviced office in Amersham, actually where David's sitting today, although we haven't been in regular attendance, as you can imagine. We have a contract engineering team who's working on the rotary steerable here in the UK. Very experienced. There just happens to be a hub of oil field experience around the Gloucestershire, Cheltenham area in the UK, because Schlumberger was based there. Weatherford had some operations there, so we've picked up a great team, a number of whom were known to me from the past. But our main sort of operational base historically has been, as David said, on this site in South Houston, where we have all the elements as you'd expect: engineering, technical support, logistics, and whatever we need. But now we are a very small company, reflective of where our revenues are. David helped me, but I think we're down to 20 odd people actually on the payroll, plus the contractors.
Correct.
Yeah. And we're building up through contractors, and we'll build up as needed, as we see the revenue increase. So I just wanted to position, kind of who we are. We're a small company, but with this, I think the key message, for the growth, is these technology prospects we've got in a known and established market, where we have a customer base waiting for us. So I think that's all we wanted to say in the main theme. Hand back to the organisers, and we can manage a few questions.
Andrew, David, Martin, thank you very, very much indeed. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions that have been both pre-submitted and submitted during the live event, I just wanted to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Martin, Andrew, David, obviously we had a number of pre-submitted questions. We've got 3 here. I know you've addressed probably 3 or 4 within the presentation as well. If I could just ask you these 3 questions ahead of then asking you to click on the Q&A tab and then reading the questions where it's appropriate to do so, and obviously giving your response, that would be great.
I'm just going to say that I don't think I addressed what was labelled as question 5 either. So any of the 5, 6, and onwards. Yep,
sure, perfectly. So why don't we start with question number 5 then that came through. It reads, what is the useful lifetime of an SRSS? In other words, after what time does the SRSS become obsolete, requiring the customer to buy a new one?
So I think I alluded to it, but I didn't give a direct answer to that question. So our business model is likely to be an active rental. So we will own the asset and operate it multiple times and maintain it ourselves. So actually the life of a product, if we own the asset, should be between 5 and 10 years. We'll probably depreciate it over 5 years, with a small sort of refurb cost. So I think our business model answer probably addresses how that's going to work.
Thank you very much. I guess the next question, probably relevant to investors on the call, around share price. I understand that the current situation in the oil and gas industry led to a significant decline in the company share price. However, the current share price represents an enterprise value of around 4 million for ENTEQ, which is ridiculously low when we look at the balance sheet, the Shell license agreement for SRSS technology, and the company's current business and technology. Apart from the situation in the oil and gas industry, what other factors does the company identify which lead to this extreme undervaluation of the company?
Again, I think I'll probably answer that, and then there's a later one which is similar that Andrew can talk about, more forward-looking rather than retrospective, which is probably the right line to draw. Unfortunately, on AIM and elsewhere, you're a victim of liquidity and availability of information and so on and so forth. Yes, we pitched ourselves as a company with ambition, with M&A opportunity, and therefore our shareholder base became quite institutional, and a lot of them are stuck by us. They're still believers. They still believe that we can pick ourselves up and go. But it left very little liquidity for people who actually listened and understood and believed in what we were doing. And so, frankly, and this may be a similar answer we'll give to a later question. The reason why we're doing this right now, and we're doing some other activities, is to generate some interest against people who can recognise the interest. So at the end of the day, share price is a market. It's buyers and sellers. And if there's a buyer right now, well, they're buying at the price it is. And we have some big institutions who may just sort of drip feed a portion of their shares back into the market. So I don't think it's a reflection of us. I think it's a reflection of liquidity on the stock market, and general sentiment towards we get a cross in the box when it's a small company and people think oil and gas and they just put we don't like oil and gas. Well, that's nonsense. It's David Andrews talked about a $12 billion market, and we're a £5 million company. I mean, come on. There's huge amounts of growth, and for all our lifetimes that will remain. So trying to be unemotional, but I hope that answers the question historically why we're so undervalued.
No problem. The slamming of the desk was the unemotional bit. The next question that came in is, I understand from previous presentations that the company has its eyes wide open for acquisitions. However, does the company also consider to put itself up for sale? One, to obtain more financial firepower to unleash the SRSS technology, and two, potentially to reward its shareholders.
Shall I? Yeah, I'll take that again. I think we would be doing our shareholders a huge disfavor, if we were to sell. It relates to the previous question, at the current valuation. As a shareholder myself, I know, well, we of course don't make forecasts, and that's not our role to be, but we have potential, in here. I think we answered the question about the SRSS. We can certainly achieve some good results from our current balance sheet and resources. And if we needed more rental fleet to address a bigger market, that's working capital and probably some asset financing. We've already sort of started making questions, inquiries into how would we finance a faster growth of working capital if we needed to, which would to fund excess growth.
That's perfect, thank you. And the final question is, besides the upcoming new product releases, what other options does the company consider to drive the share price and reward its shareholders? And I think you have briefly touched on that, but perhaps Andrew, I could push that one to you.
Yeah, I mean, just to sort of build on what Martin was saying, is we absolutely do feel we are undervalued, partly because we haven't articulated and made explained the technologies that we have coming up, and partly that the reason that is because as we're developing those technologies, we have to be careful not to to do it at the right time, and this is a good time to sort of explain the technologies that we have, show the market, and we believe that the institutional and the independent smaller investors will be more focused on that, and that should, we believe, drive up the share price to where it should be.
Okay, well, look, thank you very much indeed. That takes care of the pre-submitted questions that we had from investors ahead of today's call. If I could just ask you to look at the Q&A tab, it's on the right-hand side. If you wouldn't mind starting at the top, if I could ask you to read out the question where it's appropriate, because obviously no other investor can see those questions, and give a response where it's appropriate, and then I'll pick up with you at the end. Thank you very much.
David, can you see the questions?
I can.
Do you want to pick one and to give you a chance to?
Yeah, I'll certainly address the freehold asset. So the question was, when was the last time you had the freehold asset revalued? We haven't had it formally revalued in the last few years, but as you'd expect, I have a fairly robust discussion with the auditors before they sign off the accounts to make sure that they're comfortable that the carrying value of the 2.3 is, I have some evidence to support it. So that would be the answer to my question, to that particular question.
I'm suggesting, Andrew, maybe you pick the other question from Abby R. That's there, especially as it's about buying shares, which you've just done.
Yeah. Okay, so the question from Abby R is, thanks for the update. What do you feel is the greatest risk to ENTEQ moving forward? Apologies if this is a slightly open-ended question. Secondly, I noticed management have bought shares in the company recently, which is very reassuring. What was the driver behind this? So in terms of the risks, there's obviously technology risk with the introduction of the new technology. We are fairly, we've obviously put a lot of work into it. It's a Shell heritage or Shell background. We've done the re-engineering. We are confident that when we took it on from Shell, most of the limitations of that technology were actually engineering problems rather than concept problems. And like Martin says, we have a very good engineering team in the sort of engineering centre of excellence in Gloucester, Cheltenham, who are working on that. So that's the greatest risk, and I think we have some pretty good, we have a very good team working on it. Why did we buy shares? We believe in where we're going. We absolutely believe in the technology. We believe in the company, and it seems like a very good opportunity for us. That's why I did it anyway. It's just because I believe in where we're going, and that's one of the advantages of being what we think is undervalued. Is very good opportunity, I think.
Yeah, and I did it totally because I feel that the share price is undervaluing our potential.
Yep.
I think that but for the sake of time, we should probably keep the other questions and answer them separately in writing.
Yes, of course. Absolutely no problem at all. And thank you once again for taking the time to go through those Q&A. And as we come up to the hour, it's probably an appropriate time to wrap up. So perhaps if I could just ask, perhaps Andrew, Martin, just to wrap up. And then obviously what I'll do is I'll redirect investors to provide feedback. And then, of course, any questions that come in subsequently, we'll present to you on your dashboard for you to review.
Well, I don't think I've got anything to add. Hopefully we've positioned where we fit. We're a small but perfectly formed company, with a lot of maturity and a known market, some exciting technologies. All the elements that we need are within our now small company. We're really well structured, and with Andrew leading it going forward, I think we have a very exciting leadership and core team in there.
And I would just like to thank, it's a shame we can't see you, but I would like to thank the audience for listening and participating. So thank you very much. It would be very good to meet you at some point. So thank you.
Perfect. Well, listen, thank you very much indeed for updating investors today. Could I ask, please, investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback. If you access this meeting via our website, the feedback page will appear. If you access via the link in the email, you'll be asked to log in to submit your feedback. And if you could give company your views and expectations on the company, that would be absolutely very much appreciated. On behalf of the management team of ENTEQ Upstream, we'd like to thank you very much for attending today's presentation. That now concludes today's session, and good afternoon to you all.